Good morning, all of you. We have to calculate the EVA from the following information. What is EVA? EVA is performance measurement tool. Company earnings, past earnings, we are going to measure and we are going to compare the cost of funds with the earnings of the company. If earnings are greater, remember when earnings are greater than the cost of funds, EVA will come positive. If earnings are less than the cost of funds, then EVA will become negative, which is good for the company. To earn more, compare the cost of funds and earning should be greater than the cost of funds, right? So this is a performance measurement tool. What is the full form? Economic value added. Economic value added, income minus cost of funds. The company is raising debt and equity from the market, issuing bonds in the market of 250 crores. Equity they are raising 500 crores. Cost of debt after tax means this is the interest on the debt. Company is paying the interest of 8%. Company is paying a dividend of 15%. Company is earning operating profit of 92 crores. Tax rate is 40%. Now, please note down this question. This is the dividend paid to equity shareholders 15%. Interest paid after tax is 8%. This is our operating profit, EBIT, earning before interest and tax, and the tax rate is 40%. Calculating the net operating of profit after tax, NOPAT. Net operating profit after tax. How to calculate this? EBIT into bracket open 1 minus tax rate, bracket close. EBIT पे टैक्स रेट डायरेक्टली निकालना है और उसमें से माइनस करना है. नेक्स्ट इज कैलकुलेशन ऑफ कैपिटल एम्प्लॉयड. Capital employed is equals to debt plus equity. Company raised debt of 250 crores plus company raised equity of 500 crores. Total 750 crores company has raised. $250 plus 500 crores. Capital employed 750 crores. So on this 750 crores, company is having cost on it. We have to calculate the WACC. How to calculate WACC? First, we have to take out the weight of debt and weight of equity. Then weight of debt will be multiplied with cost of debt after tax. Weight of equity will be multiplied with cost of equity. Weighted average cost of capital calculate करना है. 5 columns. First column is capital. Second column amount in crores. Third column proportion, that is weights, proportion of debt and proportion of equity in the total capital employed. Next is cost after tax. Cost after tax. Next is weighted average cost of capital, WACC. What is the amount of capital? Debt capital. Equity capital. How to calculate the proportion? 250 crores divided by 750 into 100. This is the proportion. Next, 500 divided by 750 into 100. 66.67. Now what is cost after tax? 8%. This is given in the question. Cost of debt is KD. Cost of debt KD is 8% after tax, and cost of equity is 15% given in the question. Check it out. Cost of debt 8%, cost of equity 15%. 250 upon 750, 33.33%. 500 crores divided by 750, 66.67%. Now what is WACC? Weighted average cost of capital. 33.33 जो है उसको 8 से मल्टीप्लाई करना है. 33.33 इंटू 8. जब आप मल्टीप्लाई कर लोगे तो परसेंटेज साइन प्रेस करना है. 2.66. 2.664%. Next, 66.67 into 15 और लास्ट में एक ही बार परसेंटेज साइन प्रेस करो. 66.67 into 15% साइन प्रेस करो तो 10.00. ओके, टोटल 10 plus 2.666, 12.6664. So this is the total WACC. Next, what is the next step? Calculate the economic value added. Net operating profit after tax minus capital employed ब्रैकेट के अंदर investment amount, that is capital employed, multiplied by WACC. Next, $55.2 minus 750 crores into 12.66. Okay, so what is the answer? पहले 750 को 12.666%, 94.995. नेगेटिव आंसर आ रहा है -39, -39.795. That means the past earnings of company are not good. Company is not earning in the past. The performance of company is not good. Negative answer. Is it clear to all of you? When EVA is negative, company is not performing well, and this is not a good company for investment purpose. Shareholders will not buy this stock after looking at negative EVA. I will repeat this question. Debt plus equity is capital employed, 750 crores. Cost of debt you will multiply with the weight of debt. Cost of equity you will multiply with the weight of equity. You will get WACC. Operating profit is already given. You have to deduct the tax. Automatically you will get NOPAT, net operating profit after tax. With this formula, you can calculate the NOPAT, EBIT minus tax, PAT, NOPAT, net operating profit after tax. Capital employed calculation, total of debt plus equity. Calculation of WACC. WACC is the cost of funds, cost of raising funds from the market. When you raise money through debt and equity, you pay the cost on it 8 and 15%. The total cost you are paying, weighted cost of 12.67. This is the cost of funds of 750 crores. When you raise money 750 crores, you are paying 12.67 on it. So this is the cost of funds, 94.995, and your income after tax is 55.2. EVA is the difference between the income and the cost of funds. EVA is the difference between the income after tax and the cost of funds. In the bracket, we have cost of funds. If EVA is negative, that means it is eroding the wealth of shareholders. It is eroding the wealth of shareholders. I hope you have understood. Is it clear to all of you?